I think we could start with, well, we'll talk about gold and silver. Everyone's focusing on the March contract, but with the February contract, which completely is gone in a couple of days, right? Like 3 days. As of yesterday, for February gold contract, right? There was still 4,366 contracts open. That's 436,600 ounces, or 13.5 tons of gold. Now, what's unusual about that, in fact, insanely unusual, is that it's insanely high. That number for this late in the cycle. In fact, it's 24 times normal. It's even bigger than the upcoming March contract, which I don't know if that's ever happened. That's a massive red flag. And really what it means, what most people would tell you it means, is a classic fingerprint of a big short that sold gold that they may not actually have to pay back. And if they were planning to buy it back, one would assume that they're somewhat trapped because liquidity is this late in the February contract is very thin. So normally when a contract goes off the board, like, for example, the March contract goes off the board on Friday here, meaning it's time to either roll forward to probably the May contract, cash settle, or stand for delivery. And so when you see things this late into the February contract where there's that much gold that could stand for delivery that hasn't yet, it's very, 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 very unusual. And this is the kind of environment where, everything that the West has done for a long time is all about confidence. And for a long time, no one questioned the integrity or motivation of the West or of the United States. But that might be changing. And the moment the market believes that there isn't enough gold, the leverage that has really been the hallmark of this industry or of this platform unwinds. And when the leverage unwinds and commodities moves become really violent, we're in a world where price has been suppressed forever to support the military-industrial complex and their ability to accumulate cheap silver to make high-tech weapons for years. Price has never, it's never found price discovery. But what that has done in particular by keeping it so ridiculously undervalued based upon its value and utility, in contrast to its value and utility, its real value and its utility, it is as disincentivized domestic mining. And so when you try and find a mine, not only, silver, of all the metal mined last year, only about 20% came from companies that exclusively mine silver, about 160 million ounces. But that's it. Out of the 850 million or so that was mined, it's the sixth year in a row of a systemic shortage. About 200 million plus ounces for 6 years in a row. A 1.2, 1.3 billion ounce shortfall over the last 5-6 years. And so when you talk about why would they do this, it's being done to incentivize mining here in the United States to make it economical, because you have to dig further. Silver is found in a form very near the surface, epithermal it's called, like your skin being epidermis. And so the big deposits were found a long time ago. To find more deposits, you would have to spend more money that currently are uneconomical, or not currently, but most of the time I've known you, they would have been. And so to raise the level to this degree, which is not really something I agree with, instead just let the market trade freely and you won't need the price floor. But nonetheless, what it signals to the investors and to the domestic mining companies is, hey, let's, if we can get above our all-in sustaining cost enough to find this other silver, here in North America, let's do it. And they'll put a floor underneath it to incentivize it so that we don't end up doing something uneconomical. I think that's really what it's about more than anything. But my pushback would be just get the hell out of the way of allowing these banks to take on what has been for 30 years the largest concentrated short position of any commodity traded on the COMEX market, that being silver. stop manipulating it, get out of the way of it, let the market trade freely. You won't need a price floor. But nonetheless, that's what they're going to do. And I think it's more of sending a signal to domestic mining companies that go ahead and do it. You'll be okay in your endeavors. January was one of the busiest months we've ever had as a company in 35 years, 36 years. Roughly 1/3 the volume we did in January that we did the entire year last year, which is one of our biggest years ever. And the entire, I know you understand that. You were part of that. And all the other companies were too. So you had, for the first time in a couple of years, the public starting to, I think, increase their awareness. Price makes people aware. That's why, the big money, the successful money, who was free from the crowd, was in long before price made it something that caught people's collective conscience or awareness. But we saw a massively expanding demand. At the same time, you see massive leverage on COMEX. And the leverage being, a trader says on December 1st, geez, man, price has been going up week over week over week without stopping. Look, we got $5 million in our margin account. Let's buy a bunch of contracts for $15,000 or $16,000 back then. We can control 5,000 ounces at $60 an ounce back then. That's 300,000. So that leverage is fantastic. And it's nonstop going up. So they lever up and buy a bunch of contracts. And again, at $15,000 in your margin account, that's like 70 contracts you could have, right? And you could control 70 times 5,000, 350,000 ounces of metal. You just have to have that money in your margin account. Okay, great. Margin limits have gone up 300%. And so if you don't post more money in your margin, well, then everything is sold. And selling begets selling begets selling begets selling. The prices collapse. This is done specifically to target the speculation, the leverage on COMEX, the people that shouldn't be playing in this big sandbox. They haven't noticed anything along the way, with the exception of at the top, or as it was getting near the top, that it was overbought. And could this be 1980 again or 2011? Even those that spun it, look, Reuters calls it the devil's metal and all this stuff. So, even if it was spun in a positive light, 1 out of 1 million articles, they missed the entire bullseye completely and totally. The question is, who's standing for delivery to these numbers? That's all that matters. And that's the part that is strangely and I think kind of conspicuously, if you will, omitted, because to me, that's all that matters. When you have an environment where information is worth probably more than anything, these people are informed. You don't spend 9 figures a month for a year and a half almost, or a year and a third every month by taking delivery, which is ridiculously unusual outlier. The majority of the contracts that posted in February have stood for delivery. That's unusual as all can be. Normally it's 1% or less. So who is standing for delivery at these levels? That's the only question that should be asked. And the answer and the silence of its reporting, to me, speaks volumes. This is connecting the dots and realizing that the people who have pulled these strings are powerful enough to pull the strings in violation of antitrust law, powerful enough to have Bart Chilton, the former head of the CFTC, to be told to back down, Bart, it's a political decision, powerful enough to let JP Morgan continue to run the world's largest silver trust after paying a $920 million fine for manipulating the market, and the second or third largest stockpile of gold in the world. Well, maybe not that large, 4th or 5th if you had central banks, but a massive stockpile. They are the primary custodians with BlackRock of SLV and GLD, and yet they paid this insane fine. So they're powerful enough to do all this. I'm sure they're powerful enough to ask the media to please let this one go and don't bring it up, because it is on behalf of the United States government. It's about national security. So, again, there is a fine line between conspiracy, reality, and how things are going down. But I ask myself, is this really, is journalism and what it stood for gone and dead? Or are they just blind to what is the most obvious thing that I've seen maybe in my career, and that is the most well-informed money starting with the central banks in 2017 and now not stopping, and now moving also into the big traders here doing it. That's all that matters. To me, that's all that matters, because it tells you that price is just being used to misdirect you or to shake you off the back of the bull. And the rest of it, to me, is moot. It's easy to rest calmly in the face of massive drawdowns when you see the deliveries by these people. But